Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Tuesday, December 23rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'll be traveling today back to Chicago. I'll do the best I can to get you guys a video with any kind of market moving news or data. Looking at the precious metals, it's a sea of green on the screen here with gold setting its 50th daily record close this year on bets that the Fed will continue to cut interest rates in 2026. But you also have some rising geopolitical tensions with heavy ETF buying and elevated central bank purchases really underpinning the rally. Gold's safe haven appeal has amplified over the past week on rising geopolitical tensions, particularly in Venezuela, where the U.S. has blockaded oil tankers and ratcheted up its pressure on the government of President Nicolas Maduro. Trump had also reiterated his desire for the U.S. to control Greenland yesterday. That had upset Denmark here and then also people in Greenland. Looking at the precious metal ETF flows, and this has been one of the main drivers that I'm paying attention to, is that the ETFs have been buying gold, silver, platinum, and palladium. The exchange-traded funds added about 388,000 troy ounces of gold in their holdings in the previous session here, and it was the biggest one-day increase since September 26. We've got total gold held by ETFs rising 18% this year to 98.8 million ounces, the highest level seen since October 21st. Looking at the silver market, those year-to-date ETF holdings have risen about 19%, and the ETFs added 411,000 troy ounces of silver. It was a third straight day of growth here. And if you look at platinum and palladium, which are two markets we took an interest in here recently, platinum holdings increasing for the 6th straight day, palladium holdings increasing for the 14th straight day. You look at the gold-silver ratio dropping down to about 64-1. Now looking at the U.S. equities and the broader markets here, stock futures are really pointed for a muted open here on the last full trading session here before Christmas. The S&P and the NASDAQ, little change here, slightly lower on the session coming into this holiday type of mode here. We've got this 3-day rally on win streak really pushing the U.S. stocks back into positive territory for the month here and preserving those gains at the end of December would extend the winning streak for the 8th straight month here, the longest run since 2018. Now you look at the interest rate picture here because those interest rate expectations, they've been declining. One thing that we watch here is the CME's Fed Watch tool, and it's the January 28th meeting is the next one here. We've seen that go from about a 26.6% to about a 19.9%. Now it's a 17.7% likelihood that the Fed will reduce rates by 25 basis points to a range of 3.25% to 3.5% at that January meeting. You go out to March in that meeting there, the likelihood is about 45%. At that point, most likely Jerome Powell, his predecessor, would be named here. We might have a bit of a shakeup. We'll also have a lot of the economic data released. We should be back on track here and all caught up. Now, speaking of economic data here, we'll get readings on third quarter GDP and October durable goods that'll come out at 7:30 a.m. Central Time, followed by at 8:15 the November industrial production and the Richmond Fed Index Manufacturing Survey and Consumers Board Confidence Index for December, both due out at 9 a.m. You look at the FX in the interest rate rundown here, the dollar 97.56. So that's been declining recently. It's red again here on the screen and green across the screen for all the other FX markets. You look at the euro currency up at 118.41 and 10-year treasury yields up at 4.15%, coming down a notch here after bumping back up to 4.20, kind of coming off here, and it's really been range bound recently. What we're seeing is the short end of the curve kind of anchored to slightly lower, and we're seeing a steepening of the yield curve. You look at the volatility index for the January futures sitting at 1695, and if you look at the cash VIX, 1411. So implied volatility of the U.S. for the remaining 30 days here is one of the lowest levels in more than a year, and it really reflects the investor confidence here in the economy, and we're just seeing a broadening of this rally. You look at Bitcoin futures, surprisingly under pressure here, really going to have to level out some of the support and resistance zones because it's really been trading in this new band where it gets up to about 90, 92,000 and runs into some stiff resistance, and it's like 85 down to 80,000 as your key levels of support. Looking at the S&P Gamma exposure, market makers are currently long Gamma here, indicating some lower volatility is expected. Basically, the delta hedge here, those option dealers, they sell futures as the market rises here and they buy futures as the market falls. And what it does is it stabilizes the market and reduces volatility. Now you look across the pond to Europe and Asia here, those European stocks, they did touch another record high here. And Asian stocks rode for the third straight day with the MSCI Asia Pacific Index rising about 0.7%. So that's basically it in a nutshell. A little bit of softness here. Got some economic data, precious metals. I hear a lot of talk about that AI bubble here. What about the precious metals bubble? Just saying here. A lot of times these bubbles, they get bigger, then they contract a little bit, little air comes out, they consolidate, and then they get even bigger, and then they come out a little bit. So it takes a long time, and it takes a big catalyst here in order for these things to pop. And really, the gold market, I talked about this on Yahoo Finance here yesterday, is that to derail the rally in it, one, you might have a pullback from some of the speculation that's gone on. That's just natural here, but it's really going to take some structural changes and some shifts. And one of the biggest things that I'd be watching is the energy markets, because realistically, if this Venezuela thing does somehow turn out to be some bullish catalyst for the oil market, you start getting energy prices higher, you'll see treasury yields on the short end of the curve start to come up, it'll flatten out, and what will end up happening is gold futures would pull back on that. But that's not something that we see at the moment here, giving any of these different circumstances. The reality is that I believe that if Nicolas Rodurno was replaced by some U.S. proxy going in there, they'd probably revitalize their energy sector in order to spark a reverse migration pattern here and try and grow the Venezuelan economy, flooding the market with more oil, bringing oil prices back down. But that's just my opinion out there here. So you really need to see oil prices go up in order to drive the inflation expectations higher, and that would put the Federal Reserve in a precarious situation where they're unable to continue to cut rates here, and we would see that gold futures would slack on that. As far as silver is concerned, I believe that futures have now started a new price level, a new price band, which is what we watch on a lot of these different commodities in order to look at them objectively from where they're at here and using some of the tactical ranges in order to trade back and forth. Copper futures finally building support here, getting this push back up over that 550 level has been an area of support and consolidation for quite a while. We'll have to look at what the recent contract highs on copper and see if futures look like they're indicating to point pushing back up to those levels. Now, platinum I talked about going up to all-time highs, which are very close to there right now. And then the same thing with the palladium market, getting back near that 2,000 mark. So we'll see when I go to Chicago. I'll probably wake up in the morning, be doing this video for you here, and hear a little Sawzall action going at those catalytic converters again, reinvigorating that theft of that particular product here with these rising prices. So you guys got any questions, give me a call, 312-858-7303. Shoot an email to info@bluelinefutures.com. We'd love to get an account going with you guys over here. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.